Hello, it's time for another trade recap. Today's trade recap is going to be on gold, also known as XAU USD, and we're starting on the 4-hour time frame because the 4-hour time frame is the lowest time frame you can go to establish the higher time frame bias. And the higher time frame bias is looking pretty delicious here because we have this swing low to this swing high is our dealing range, and in a discount of the range we have this 4-hour imbalance here. And when price tapped into discount of this range and filled in this 4-hour imbalance, silver was actually taking out this external range low, but gold did not take out that low down here, so that is an SMT. So now we have a discounted key level with an SMT. Now that means nothing unless price shows it's willing to trade higher and flip bias. So I'm going to mark out this as the external range liquidity right here because we can potentially see an internal to external move. Now on the 4-hour time frame, this up close candle before the raid of this short-term low is a breaker block. Also, this down close candle right here is an order block, but you can see we have a low, a high, a lower low, and then a break above this high. So this is a breaker. And the fact that the 4-hour time frame is showing willingness to trade higher, that is imperatively important. We have the 4-hour key level. Price could just still blast through this and then trade down to this low. But the 4-hour has now showed the order flow has shifted, which is great. So we are entering the buy side of the curve to trade up to this external range liquidity. So I went to the 1-hour time frame and I saw that this down close candle was the one that raided this short-term low. So that was my CSD OB on the 1-hour time frame, and I'm going to make that thick in it so you can see it extra thick. Price closed above this down close candle that raided the short-term low and then used it to trade higher, which is a good sign. And now we have this down close candle, which price also closed above. So I thought, damn, price is bullish. Let's go. We're on buy side of the curve. Now this actually could have been a trade, but I didn't take that trade. I was going to take this trade on the 1-hour time frame, but I think I actually missed it. Yeah, I think I missed it. So I went down to the lower time frame, but this is the PDRA which I'm trading away from. And also we do have this very small 1-hour imbalance, so you can use that as well, that 1-hour fair value gap right there. But for me, I was using this order block, which is kind of like a propulsion block. I mean, you could argue this down close candle here is the propulsion block because this is the down close candle that pushed price into this down close candle. So this technically is the propulsion block, but this is just like another continuation block, also known as an order block. Okay, down, just simplify it to an order block. Then I went down to the 5-minute time frame because this is a 1-hour order block. I went down to the 5-minute. I saw that we had this dealing range, and I saw that we retraced down into a discount of this range during the New York session. We raided this short-term low, and we tapped into the order block again. This orange line right here, you see how we tapped into that perfectly and raided this short-term low and revisited this old 5-minute buy-side imbalance and then actually closed within it as well. So when price inverted this sell-side imbalance and created a buy-side imbalance, I was like, yep, price is absolutely bullish. So I went long. I actually missed this initial entry. I went long somewhere like up in here after we reacted. I've got the receipts actually. Let me just show you those. Yeah, let me just show you those. I've got them right here. So you can see this is the 1-hour perspective. We're in a market maker buy model. It looks very good. This was the entry on the 5-minute time frame on Friday after raiding this short-term low in discount of this range and tapping into this 1-hour order block. 0.45% risk. Actually, I messed that up. 0.45%. Let me just change that. 0.45%. And you might be thinking, yo, why haven't you put how much you profited? Is because I'm actually still in the trade. I know, I'm still in the trade. It's crazy. It's crazy. Let me actually get this back up. I hid everything. 2, 3, 4, 5, 6, 7. So this was that 5-minute entry down here. And we did retrace back down into discount of this dealing range, tapping into this 5-minute imbalance once again, raiding this short-term low, and tapping into this order block, which is very clean, very, very amazing. And Friday, we kind of just consolidated here, but I thought I was confident in higher prices, so I decided to hold it over the weekend. Then I saw Sunday, we opened up and expanded higher, so I was like, yeah, we're going higher. We're absolutely going higher. I'm going to hold until the external range liquidity, which is up here. And yeah, this is it. I'm still in the trade. You can see we've expanded here nicely. We continued higher from this rejection block, which I noticed earlier. RB for rejection block, which is the lowest closing price within this swing right here. And if we mark out this dealing range, this swing low, which filled in this new week opening gap, to this swing high up here, we retraced down into discount of this range, tapped into the rejection block. Then we shifted structure above this short-term high. We're also below midnight opening price as well. We have relative equal high buy-side liquidity up here. We retraced down, discount of the range into the rejection block. We closed above this down close candle, this thick 15-minute down close candle, which is basically a change in the state of delivery. And then we retraced down into this new dealing range that we created, into this 15-minute imbalance, and then expanded higher during the New York session. And we also displaced above this short-term high with an imbalance, which price used as support to trade higher, displacing above this high, which now I'm hoping price will retrace down into discount here, and then use this imbalance to trade higher to the external range liquidity. And if it doesn't, I'm going to throw my laptop out the top floor window, because that would not be good. But we're in profit. Stops at break even. If this comes down and stops me at break even, I'll be very, very disappointed. But for now, I'm going to hold. I just have a feeling gold is weird sometimes. Let's see if this holds. It should hold. Why should this 1 hour fair value gap not hold? Old highs that get displaced above can act as support, and we literally have that right here. So I'm hoping I check this in a few hours and we're like bang. But yeah, that'll be good. I'll update this trade in 5 seconds. 4, 3, 2, 1. I'm back. Well, that took a long time. That was me 2 days ago, on Monday, which is this day. This day. Yesterday, price didn't do anything. But we did hit the take profit today at 10 o'clock GMT, also known as 5 o'clock EST. Let's go over the trade. I've already done that, right? I've already done that. So now I just show the result. This was the entry. And this is how long it took to deliver to the take profit. Look at the entry all the way down here, that orange box. That's where I entered. As you can see, this is the orange box, the fair value gap. I entered just above it. This is that orange box, very small down there. And we expanded higher. Oh yeah, I already talked about that. Oh yeah, it was Monday. Yeah, this rejection block, everything I described there, we expanded higher. Oh, that's what I finished off on talking about. It was this high that got displaced above, wasn't it? And I was anticipating this 1 hour fair value gap to push price higher. Look how close price got. It got extremely close. And then we manipulated down very aggressively. I guess stopping out anyone who has trailed their stop losses around this area. And we tapped into this rejection block actually. So the rejection blocks were pretty popular on this trade. And then yeah, Tuesday, we chopped around day before NFP. And then today, Wednesday, we expanded higher and hit the final take profit. And this trade shows it from a 1 hour, this screenshot, shows it from a 1 hour perspective. And you can see this purple box right here, it's an important level. This was a fair value gap on the sell side of the curve that price retraced up into and got used as resistance. Then we expanded down very aggressively. Now this fair value gap right here on the buy side of the curve, it got closed above. We did disrespect it again because we traded down into the new week opening gap, traded above it, traded back down into this rejection block, and then when we had this energetic expansion, just falling short of this buy side liquidity up here, you can see how price used this multiple times, not closing below it, which is a very nice sign that price was bullish. So we raided this short-term low, and then from there it was just bullish price action to the relative equal high buy side liquidity. Price may have fell short just here and traded lower to engineer more buy side liquidity above these highs in the form of buy stops, because people who are short will have their stop losses above this high, and how do you get out of a sell position? You have to buy it back. So the people who bought down here and here and here and here have to sell to these willing buyers above these highs to get out of their position. So maybe that's why price just fell short here, to engineer some more buy side liquidity. But that is it. That is the gold trade updated and completed. Very nice trade, very great trade. That is it. We're done.